All right, guys, welcome back to the channel. This is going to be the new trading week for the US 30 beginning tomorrow, December 14, going all the way to the 19th. So let's get right into it. God, we just give you thanks for your blessing and for your goodness. Pray that you'll be with us this week as we go into the trading week. Bless our trades. May they be successful. Bless us with consistency and patience. We thank you. Amen. All right, guys. So this week, those of you who had the opportunity to watch the video review of last week, um, this will actually help you to go into this content for this week. So if you have not watched that video, please hit pause, go ahead, hop over and look at the review video that I did for last week as it related to the trading for the upcoming week. All right, a lot to talk about this week. As you know, the market actually did complete the all-time high that it has been searching for the past number of weeks into months. That was completed last week after the interest rate decision was released on Wednesday. Now, what we saw after the market hit that all-time high was that we saw a retracement on Friday, the beginning of a retracement on Friday. Now, one thing that I want to emphasize is that all-time highs and higher highs must be made from higher lows, okay? So every time the market hits a higher high, the market will retrace at some point in time to make another higher low, okay? The problem is a lot of people confuse a retracement with a reversal, and that's not true. The NASDAQ does not do reversals. The NASDAQ does retracements because it's a 100% bullish instrument, okay? Now, if you notice on my screen here, I do have the fibs that I've drawn. Now, of course, people have asked in the future, in the past, how do I come up with my take profit levels? How do I come up with my retracement zones? Everything is done based on my fibs. There's a video that I have on my series on my YouTube channel which deals specifically with fibs. Okay, so I'd encourage you to actually go and check that video out so you'll actually see the levels that I target whenever I am looking at my retracement or my trend continuation fibs. Okay, now the fibs that I have here is based on my last high, my last low to my last high. Okay, my last low was completed last week Tuesday, or last week Wednesday. Yes, Wednesday. Last week Wednesday, and it went all the way up until Friday. Okay, now my fib is based on this. So if you notice, I've started my fibs here. This is actually a buy fibs. This is actually the trend continuation fibs. Now you can draw your fibs two different ways depending on your your bias. So you can actually start from the top and extend it down, okay? Or you can start from the bottom, your last low to your last high. I draw my fibs like this when I am dealing with the trend continuation. I draw my fibs like this if I'm dealing with retracement. Okay, so let's just take a look at these two fibs right here. Okay, so one is, of course, the one closer to this side is my my sell fibs, as I like to call it. Okay, and the other one is dealing with the continuation, which is my buy fibs. So if I look at my sell fibs, for example, okay, my sell fibs would be from here to here. Okay, so if you look right here, you have your 78% retracement, you have your 61% retracement. Now, you can use any fibs, Okay, as long as you understand the concept of what you're doing. And I don't want to confuse you right now. I'm just showing you a number of things. Now, if you notice, price came, it actually touched on the 61% retracement area right here. Okay, guess what? Price is actually expected to shoot up, and then you have your two extension areas. So you have your 161.8% and you have your 261.8%. Okay, these are your extension fibs. Okay, so let's look at let's look at this for a brief minute. Okay, this here, I'm expecting price to actually continue going up. Okay, but I'm tracking my retracement. Okay, I'm tracking my retracement. So my retracement came here. I'm expecting it to actually continue up. The other fib, which I actually drew, I'm also tracking my retracement, but I'm also looking at where I'm expected my take profits to be. Remember, my take profits are always based on my expansion zones. So you're minus 27% and you're minus 61% if you're using this fib. If you're using the other fib, then of course your expansion zones are going to be your 161% and your 261.8%. Any one of those works perfectly. You just need to understand how to read the fibs. All right. So for the purposes of this analysis, I've used this fib, which I have here, which goes from my lower low all the way to my high, which is actually a new breaking structure. What we saw last week was a new breaking structure. Remember, since the last all-time high that the market made and the last low, okay, or the last low to the last all-time high, you saw the price consolidating between those 2 points. That point, which was the all-time high, was broken last week, okay? Which is why we have a new all-time high this week. So once that new all-time high has been broken, it tells you that the market is now back in trend. The market is now making higher lows to higher highs. How do we know this? Because the market actually bought from the largest higher low, which was the daily, which was way back on November 21st of this year. This was the higher low. Although it says new low, it's higher than this higher low. It's also higher than this previous new low. So the market is in fact making higher lows to higher highs. So market bought from here, completed this move last week, Friday. Okay, so the market is now back in trend. All right. How do I confirm if the market is in fact in trend? Well, like I mentioned to you before, indicators, I use only indicators to show me, to confirm what has already been analyzed. So I already told you that the market is now back in trend because it broke this higher low. Well, if you don't believe me, well, let's go on and get some more confirmation. So here's what I'm going to do. I'm going to use one of my most basic indicators, which is the Williams alligator, which is, EMA, or smooth moving average indicator. So of course it uses the lips, the teeth, and the jaws. And you can always go and Google and to see how to interpret everything that you see here. However, when you look at this model, so we're looking at the 2 hour right now, you see here that the market is in fact trending. It's going back in trend because of course, once all of these lines are aligned, as you see it here with the green on top, the red in the middle, and the blue at the bottom, it tells you that the jaws are opening and it's actually going in the direction of the trend. Okay, let's look at some of the bigger time frames. So let's look at the 4 hour, for example. There you clearly see it. This market is in fact trending. So although you saw that sell that happened on Friday, okay, that sell on Friday only stopped at a higher low. Okay, it only made a higher low. So remember, the trade is you want to buy from your largest higher low and continue to your higher highs. Higher high was made last week Friday with the all-time high. Guess what? Retracement happened. Retracement happened, and you came down and you know had a higher low on your 1 hour, you also had a higher low on your 2-hour time frame. So again, you're coming from a lower low. Market came, it broke, it made that new high. So it's telling you, I want to continue going up. Okay. Now you need 2 confirmations. First confirmation happened on Friday. You have a higher low here. Okay. Once this confirmation happens, you need to get your second confirmation to know whether or not that trend is actually, in fact, valid. Okay. Now, one thing that you always know, you always hear me say, every single high that the NASDAQ 100 makes will get broken. So using that rule, using that theory, if the last high that was made is right here, and your last low that was made is right here, which is a higher low, then guess what? This high is going to get broken at some point. So it's easy for me to actually put my first take profit level here because I know at some point in time, this high is going to get taken out. Okay. So if you notice, I have here, I'll get into this a little bit later. This is my zone of interest. This is my first take profit level. This is my second take profit level and my third take profit level. How did I arrive at these? Well, obviously, the first take profit level is going to be my previous all-time high because that is the first thing that will get broken. Then after that gets broken, the market can either retrace, create another higher low, or it can continue pushing through and breaking this second level that we see here. Okay, let me just go back and show you something real quick. Let's look at last week. So last week I had all of these take profit levels here, which I highlighted from the, from earlier in the week. Okay, so you had the previous high, which was here, which was Friday's high. Okay, then you had the minus 27%. You had the previous all-time high, and then you had a minus 68%. And then, of course, I had an ultimate swing take profit, which was here. Now, look at what happened. As soon as the FOMC interest rate decision came out, the market just pushed. It came up. First thing it did, it took out Friday's high from the previous day, retraced, came back again, hit Friday's high again, took out the minus 27%, took out the previous all-time high, and then took out the minus 68%. So you had 1, 2, 3, 4 take profit levels that were hit last week. Okay. My ultimate swing TP is here. I'm not even worried about that because I know it's going to be broken at some point in time. Not a problem where that is concerned. Okay. Going back to this week's analysis, here we are again. So here's where I came up with these levels all the way here, my take profit levels. Now, the question remains, how do I know when the higher low, the largest higher low is complete? Well, again, using my fibs. If you have a chance, go back and watch those fibs video, which I actually put out. The NASDAQ 100 likes to retrace to the 61.8 or the 78.6 levels. All right, that's where more times than not, that's where it usually goes. And once it goes to any one of these levels right here, okay, rest assured when it comes back, everything in its sight all the way up is going to get broken. It may consolidate before it actually does it, but it will get broken. Okay. So my zone of interest for this week. Now let me mention to you guys when it relates to my zone of interest. Zone of interest does not mean that it's guaranteed to go there. Like I told you, the only thing that's guaranteed on a NASDAQ 100 is that the market will always break a previous high. That's the only thing that's guaranteed. As it relates to your lows, it's not guaranteed that your lows will get broken because the market will shoot down. Okay, the market will shoot down and you say, okay, fine, yeah, I'm expecting it to go here. But you know what? You may have a rejection like you had here on Friday and the market stopped right here. Session ended. It's like, okay, you know what? I guess I'm not going to reach here. And then it may shoot up from right here. That's why I always say to you, you need to monitor your higher lows, right? And see exactly where they actually form. Okay. Now, what I want to find out from you And what I want to let you know is that I have my zone of interest right here. It's at my 78.6%. All right. I'm expecting price to come here. Okay. Will it go? Will it go here? You know what? That remains to be seen. But like I said, I'm not trading for my sales. I'm waiting for my sales to be completed. Then we actually want to go up from there. All right. 1 second. Let me just respond to a text here. Okay. Now, so once the price comes here, guess what? I'm happy because guess what? It means I have a bigger pip haul on the way up. I have more pips. I have more profit to take. The longer the retracement, the bigger my profit is going to be. All right. The bigger my profit is going to be. Now, so again, if price comes here, I'm the happiest camper because I already know that this is going to get broken. This is going to get broken. And this also is going to get broken. All right. So, I want to actually look at what I'm seeing for this upcoming week. Okay. Now, as I mentioned to you, this is my zone of interest. Market ended here. Okay. This is if you notice, I actually have a line right here. I have a TP here. So for those who actually, took sales, and like I said to you, I'm not encouraging anybody to go out there and take sales because I'll tell you, 95% of you don't have a clue what you're looking for if you're taking a sell. So I do not recommend the sales. Okay. Wait. It's better for you to wait for the sell to be over. Then you take your buys. Those are your safest trades. Okay. No. So this is my zone of interest right here. Now, if the price comes here, like I mentioned to you, it's going to take off and we're actually going to break these levels. All right. So that's what I'm watching for. Now, remember, Mondays are always the days when the market takes to do the retracement, the consolidation, and display bouts of volatility. Okay, so you may not see a straight shot all the way to your zone of interest. You may see price consolidating here for a number of days or a number of weeks or even a number of months. Okay, while I don't expect it to be an extended retracement, okay, I do expect to see some amount of retracement, further retracement, not by much, and then I expect to see the price continue right here. Give me 1 second again, guys. I'm sorry. See. All right. So here we go. So this is where we are at right now. So on Friday, this was a good place to actually take profit. I mean, it was a nice sell for those of you who actually took that sell. And guess what? You're waiting. Made a higher low right here. Okay. Now, I'm not expecting anybody to actually jump in and to take the buys right about now. You really want to wait. There's no rush. There's no rush on it. Once you understand what the market is doing, there is literally no rush. Guys, stop trying to think that, oh my goodness, I'm going to miss out if I don't jump into the moves. Learn to wait patiently for those moves to actually be completed before you actually take those higher lows. All right. Now, if you look at your larger time frames, if you look at the 3 hour, notice the 3 hour didn't put on anything. Okay. I do expect at some point in time, higher lows to actually be registered on these time frames before we actually have more sustained buys. So here's what I'm going to do. Let me take this fib off because the fib has served this purpose. I just left it on there so I could show you how I got to these levels. Let me just put it on real quick so I can actually add my lines. I forgot to add my lines. So once I have my levels right there, I usually just put in my lines. And so I'll go and I do change the thickness. So this is 49,253. So here we go, 49,252.5. Okay, that's the first one. And then the next one is going to be 49,746.3. 49,746.3. Okay, and already this one, the previous all-time high, that's there. That's the all-time high level. And of course, my zone of interest is marked right here. Anything else between here, any of these levels right here is consolidation. How do I know this? Well, this is the higher high, this is the higher low. On the smaller time frame, this is the high, this is the low. Anything that forms in between here is going to be consolidation. Once you have a lower higher, lower high, higher low, lower high, higher low, anything that says lower high or higher low is going to be consolidation. That's going to happen in between this zone right here, the last low and the last high. So this is your consolidation zone right here. See how easy that is? So of course, here, take profit level. Okay. Anything between here is consolidation. Anything below here is a breaking structure on the temporary, sorry, on your smaller time frame. And when you go on your larger time frame, like your 4 hour, if it breaks here, it's a new low. Once it breaks this level right here, it's a new low. Now let's look at the daily, for example. See this point right here? Let me take this off so you can see it. Stake up the alligator. I don't need that. Okay, this is my 100% line. Anything that breaks below here, notice, guess what? There's no higher low right here to be broken. So if it breaks and puts a signal on here on my largest or my larger time frame, it's only going to be a higher low because it would have to break this low in order to produce a new low. Okay, so that is why I mentioned to you, your market is in trend. It's going to higher lows to higher highs, and it's not going to stop. Okay, so going back here, so if the market breaks here, we have a new low on every single time frame from the 2 hour all the way up until the, let's see, I think it was the 11 or the 12 hour. Yep, it was the 11 hour. So all the way up until the 11 hour, right? If it breaks here, it's a new low. From 11, from the time frame down, 11 hours, all the way down to the 1 hour. If it breaks this line right here, it's a new low. But here's the cool thing about that new low is that it still would be higher than this low. So you still have a higher low. So I'm not worried about this market being reversing or this market being bearish right now. That's not going to happen. It's not going to happen. So those of you waiting for this eternal bearish run to happen, you have a long time to wait because you still have a whole host of time frames above that would have to break below this level in order to put on a new low on your largest time frame. Okay, now let's look at the monthly, just for, giggles. In order for you to have a new low on your monthly, you'd have to come all the way down to this daily support line right here. I know some of you are sitting down waiting for the market to get here. Guys, it's not going to happen. Stop waiting. It's not coming down there. It's never coming back down there. Okay? Look at history. Okay? All of these are higher lows. All right? You had one breaking structure, temporary breaking structure right here, which happened back in 02. That was the last time you had a new low on a monthly time frame. Guess what? Even when you had this new low right here, guess what? It shot all the way back to make a new high. So like I said to you, the market is in fact bullish. Okay? So stop trying to convince yourself that somehow we're going to have Armageddon and somehow this market is going to crash and the economy in the US is going to go all the way to the dogs. Sorry, guys, if that's your strategy, think again. You probably need to rethink that strategy because it's not going to happen, right? Literally, I stand here and I make no apologies for telling you it's not going to happen. All right, the market is making higher lows to higher highs. So what am I looking for this week? Well, I already showed you. All right, let's take the fibs off. The fibs are right there. Show you again, 78%, between 61 and 78%. I'm expecting that the price will come within this region before I get a sustained buy again. Or it could actually retrace from any one of these levels right here and actually go right back in trend and start to break all of these take profit levels that I have. And anything here is fair game because right now you see that the price actually stopped. It went to the 38% line right here on Friday. Okay, and below that you have your 50% line and your 61 and your 78%. Now, the key thing about 38% line is one reason why you don't want to trade when the market is in that zone is that on 38%, the price can shoot either direction. So the price can say, okay, you know what? I'm done. I'm going right back up and just go up very violently. So which means if you come back down and you have a retest here on the 38% line, expect the price to actually shoot straight up. Right? Expect the price to shoot straight up. Now, if you do have a break of the 38% line, expect it to be violent before that higher low is confirmed. However, if Friday is anything to go by, we saw some amount of exhaustion here. So you actually had some serious consolidation that was taking place right here on Friday afternoon. All right. So there is consolidation right here. So I'm expecting to see that. So I'm expecting to probably see like a lower high, you know, some sort of lower high and then a low before actually going up. But I really don't expect, I honestly don't expect to see a shoot from here all the way up. Guess what? Stranger things have happened. But just remember, even if you miss the initial buy, don't chase the price. Wait for the price to come back and create another higher low. Because it will happen. It's guaranteed to happen. The market makes higher lows to higher highs. The guarantees are every high will get broken. Once the high is broken, you are guaranteed to have another higher low. Not a lower low, you're guaranteed to have another higher low. Because that's what the market does. Higher lows to higher highs. All right. So guys, didn't want to have this video drag out too long. But let me just take this off so we have a cleaner look at the charts. So zone of interest, expecting price to come here before any kind of sustained buys. And then from here, I expect this to shoot up and actually start breaking these take profit levels that I have right here. So another clean week in terms of market structure is expected. Okay, there's no breaking structure. There's no lower highs, lower lows being made anywhere in the market right now. The market is in fact trending. And towards the end of the year, a lot of people are talking about Santa Claus rally and all this yada, yada, yada. Guys, I'm going to tell you, stop listening to phrases that you have no clue what they're worth and stop trying to apply them to a market which does not even respect the news. Okay? I tell you, any volatility that the market creates happens within an already established market structure. Here's your market structure right here. Your low to your high. That is your market structure. Anything that the news is going to create over the next couple of weeks is going to happen either between here or above here. If it happens between these 2 points, that's consolidation. If it happens above here, that's a trending market making higher lows to higher highs. All right. So that's basically it. Price is expected to come here. Zone of interest again. Shoot up. Or guess what? this may very well be my zone of interest. Now, why? Another reason why I actually chose here as my zone of interest. Notice what the price did. It came up, it broke this area right here. Okay, came up, came back down, tested on this area right here, consolidated for a bit before going up. Okay, right here, this is a clear area of consolidation. So if price comes back here, we already know what price is going to do. It's just going to confirm a higher low right here and then continue to shoot up again. All right. Another scenario that I want to look at is since the 3 hour has not signaled a higher low, and a higher low is still in the cards, because if you look at all of these candles right here, all of them are bearish. Okay. But it's not bearish in a threatening way. It's not bearish to tell you that, oh, it's going to continue falling. No, it's not. It's bearish to tell you that, okay, fine, I need a higher low. Now, if you look at your previous time frames, your smaller time frames, they have already signaled a higher low. So anything that's going to happen that confirms, okay, it's still going to be a higher low. And guess what? You have all the way down in this area for that higher low to be still valid. Okay, so market can open, you can push. Okay, really don't see you pushing past this area right here. Even if you break below it for a little bit, guess what? It's only going to be temporary, because you have one minor support area right here. Okay, you have even a greater support area right here. Okay, price came here, tried to go down. Guess what? Bounced, found support, went up. Did some consolidation right here, went up. Came back down, you have a new area of consolidation right here. So you may have something that looks like this. And let me get my let me just get my drawing tool so I can show you. So you may have something that looks like this. All right. So this is your higher low. Then you may have a lower high. And then you may have a new low, which puts you right in this area right here. Okay. Let's just change this to green so we can see it. So we can actually see it better. Let's change this to green. Change that to green so we can see it better. All right. So here we go. So the higher low, which is formed right here, you may have a lower high, and then you have a new low, which forms. This is when this zone of interest would become valid for me. Okay, if I have a new low here, this makes it valid for me. All right. So for me, I'm not really hurrying, not really rushing a trade. I have a full week to trade. 5 days to make my target. All right. No use in rushing. Mondays, Tuesdays, and sometimes Wednesdays, consolidation, retracement, and bouts of volatility. All right. Last week, believe it or not, traded only 2 days, hit target. So I'm learning more and more every day that I can actually trade for less days. I mean, take entries for less days, hold my trades longer, and get a better return instead of trying to take entries every single day. And that comes through practice, and that comes through analysis. So that's why I always tell you guys, analysis doesn't stop. It keeps going and going and going, and you're always seeing something that you can improve on. Always. But one thing that will never change is the fact that the market is making higher lows to higher highs. It is a bullish instrument, and that is how it will be traded. If you try to trade it any other way, you're going to end up losing. And those are facts. So with that being said, for this week, just to recap, the market is in fact trending. It broke the all-time high. It made a higher low. That's the first leg of the confirmation. So you want to actually see the final confirmation here, or you get some consolidation to create that new low, which I suspect will happen right here, because this area, the market does not like to leave open spaces. It doesn't. Doesn't like to leave open spaces. And this right here is an open space for me. There's no closure right here as yet. All right. So I'm looking at it. And if you look at last week, always look left. Look at last week. Similar scenario. You had a higher high, which was not an all-time high, but you had a higher high on your 1 hour and also on your 2 hour. Price came down, it made that low on Monday. Okay. Then it made a lower high, then a lower low. Okay. Before shooting all the way up. Now, the difference between last week and this week is that on Friday, last week, you had no higher low signaled on your 1 hour. So which means the market needed to find that support point because it was not showing you a support sign on Friday. Now, let me just do that real quick and show you what I'm talking about. So this was Friday right here. This is where the market ended on Friday. Notice, this is the 1 hour. There's nothing signaled here on Friday. No higher low point. So the market is searching for that low. So guess what? It came down and broke this area here to create that first new low. It came down and it broke that low, that previous higher low, sorry, to put on that new low. So let me show it to you. Once the market actually breaks this line, I'll just put in a line right here. Once it breaks this line right here, you're going to see new low showing up. So here we go. Here we go, here we go, here we go, here we go. There you go. See, broke that line, new low showed up. All right. And then once it's a new low, it's going to continue to complete that retracement point. So that's why you saw it going all the way down to completing that lower low point. So it went down and it came back up and made a lower high. And then it went down and made a lower low. Kept falling until it did that. And then it went up. Okay. Now, that was last week. Now, the difference with this week, let's come out of that. Now, the difference with this week is that on Friday, instead of not putting on a signal, it put on a higher low. So it found support on Friday. It didn't leave it for Monday. So it found support on Friday. Now, am I going to just jump blindly into this market and start buying once the market opens? Absolutely not. I have time. I have time to wait. Because again, the market likes to make sure it confirms and it rewards the patient. All right. So I'm not looking to jump in right here. That might be a recipe for disaster. So just learn to wait, learn to analyze, and look for the keys that the market does. Like I tell you, every single week, the market shows you exactly what it wants to do. We are the ones that's not paying attention. And I just want to address something real quick. A number of people keep talking about how the market is manipulated and yada, 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 and they go on and on and on. No, guys, there's nobody manipulating the market. And if you ever notice, every time when somebody says the market is manipulated, it's somebody who's always losing their account and losing their trades. So they're always looking for somebody else and something else to blame. The market is not manipulated. You just need to spend the time and learn how to trade. I used to do it also. Okay? I used to be in that boat also. The market is not manipulated. Stop saying that. Stop trying to tell people that and stop trying to convince others and yourself. It's not manipulated. Okay? The fact that you're losing is that you're doing something wrong. Don't look to blame anybody else. The blame needs to be on you. You need to learn to do what is required in order to be able to beat the markets at what it does. And you do so by learning market structure. All right. So guys, thank you again for watching. I hope this video will help you in the upcoming week and we may continue to be successful. So God, thank you again for your blessing and for your goodness. We ask that you will just help us to have a successful trading week and be anyone watching this video, may it serve as a source of inspiration to them and help them to continuously develop their strategy so that we can all succeed together. We thank you and we love you. Amen. All right, guys, take care. Have a wonderful trading week, and I'll see you next time. Bye-bye.